Hey everybody, welcome to Trading Capital's Daily Analysis video. I'm your head market analyst here on July 26, 2022. Jumping into the charts on this Tuesday, we have a lot of price action that has occurred today, and we will continue to have a lot of price action, I'm sure, as we head into the earnings for many big cap stocks. We have Google, we have Visa, we have Microsoft, RTX. There's a whole plethora of names started. I mean, they started, really the bigger companies started this morning, and they're going to continue today, tomorrow, and Friday as well. So discussing the S&P 500, overall it has been a down day. We are just down over 1%. You can see this is where we opened over here. We had a little bit of a gap up, and then the selling just commenced all day. It was a very impressive tight range of selling that has occurred. You had a little bit of a bounce. The reason why you had a bounce is if we simply draw a trend line over here, you can see that we've hit support. You did not confirm below this this channel. You recaptured it, and now you've been teetering with this level of support and resistance. Overall, it looks like the price action is going to trend lower. It's really going to come down to what is going to occur with those mega caps that report today, specifically Google, Microsoft, and Visa. Overall, Microsoft, we'll touch base on them. They have been selling off, so it has tremendously brought down the indices. But notice how we were watching this head and shoulders formation that we mentioned in yesterday's video, and it clearly broke. It has triggered a potential downside move to this 386.74. which stands to suggest on a technical basis, and I'm speculating here, but the probabilities allow me to speculate more accurately. The speculation is that since this head and shoulders pattern on the S&P has triggered, and since you have not completed that fully measured move to the downside, I'm going to put it on a scale of probabilities that since this completed measured move of this head and shoulders pattern takes you down to this 386 mark, which is just over 1% away, I'm going to speculate that earnings are going to weigh in on a cumulative basis more negative for the market, just due to the fact that this is still a negative pattern that has triggered and is really only halfway to completion. So let's go and we'll have to monitor earnings very closely, which I'll do another video. But overall, I do favor that earnings will have a cumulative negative effect on the market. And that's a pure speculation just off of this single pattern alone. Overall, if we flip to the daily chart, let me just remove this trend line. If we flip to the daily chart, you can see it's been an extremely light volume day. I mean, yesterday was really light, 53 million by the close, and then today is really light as well, 39.6. I mean, that could pick up with negative earnings, but overall it's an interesting level that we're teetering with right now, because if I brighten up this trend line over here, you can see that you have these two parallel channels, and let me just erase this one here because that one does not belong. So you have this parallel channel which you arguably broke out of, but you failed to confirm above that channel. So now you're retesting this area of support, and this is a big crucial level for the S&P daily. If it can't hold that, then you're going to start chewing through this wide range green bar. Once you get through that, there's not much support to this gap fill and all the way down here. But overall, the fact that the markets had an attempt at a breakout and have failed kind of again by not confirming does lead me to the suspicion that, again, earnings could have a cumulative negative effect on the markets. You know, you may have strong with Google, weak on Microsoft, or weak on Visa, but overall, I do think the earnings will be negative. If we flip to the QQQ, the NASDAQ has had a sell-off day as well. Big cap is tremendously under pressure, so it's nearly double the amount down compared to the S&P. It's down over 2% on the day. You can see that the selling really started over here. This was your yesterday's post-market, and then your pre-market action occurred, and you started selling in the pre-market, and you had a little bit of a bounce to retrace to the low of that pre-market, and then you started collapsing again, and the selling has just continued all day long. Very fierce bout of selling, but it's been slow and controlled. If we look at the daily chart on the QQQ, notice how we have chewed through basically the last 3 up days. We've chewed through to the downside, and again, you are coming to that area where this was your original breakout that the Qs broke out of, and now we're retracing back to that zone. It's just coinciding with the 50-day moving average as well as the 25-day. So there no doubt is support around this area. You're coming into a little bit of a necktie, but if you break this support, that's going to be extremely bearish for the markets in my opinion. Let's take a look at natural gas. Natural gas is extremely fascinating. This morning it had a massive pop-up. We added to our natural gas short via the KOLD. This morning pre-market we sent out the alert to everybody, so everybody should have got that. And what a beautiful ad. I mean, 937 and change we added. If we look at the KOLD, the interesting thing is we added at this 1101 or 1102 mark, and it doesn't even show it on the daily chart. You have to go to the intraday action, and look at that pinpoint ad. Boom. Beautiful price action. And the intriguing thing is we were discussing this measured move yesterday, which I explained what that is, and look where you are. You are failing to close, or so far there's still, an hour and 14 minutes left on this daily chart, but it looks to be shaping up that you're closing below or right on that measured move, which shows that the power of measured move in the technical show that typically moves of symmetry will have massive levels of resistance, and that's what we're seeing here. We're discussing the major measured move. Within a major measured move, you had two minor measured moves, so extremely powerful technical signals, and it's just impressive that we were able to capitalize on the short and leave ourselves great maneuverability. And with that last ad there today, we're almost in the money on our KOLD trade already. So this leaves us a lot of potential. I think at the minimum we get a pullback to this area, to the 791 area. And we'll just have to monitor the price action from that point on. But via our KOLD, I mean, that would net us basically around 17 to 18% if we got that pullback simply to the 791 area. And arguably this is going to, in my opinion, can and should go a lot deeper than the 791 pullback. But it's just nice to know that we don't require much of a pullback anymore due to the brilliance of this ad this morning during pre-market trading, and it has considerably pushed our average well off into a decent average. If we take a look at oil was positive on the day, and you've had this nasty reversal. Volume is starting to pick up on oil, so that's something to note. We're teetering with this daily 200 moving average as well as this pivot low, so there is support there. But since you've hammered on this multiple times and actually pierced it but managed to close above it, I do think this next go around we're going to see some consistent daily closes below this level. We have still yet to see a daily confirmation candle below this $93 level. So that's going to be extremely bearish for oil once we do get that close. And I do think we will get that close sooner rather than later. Let's take a look at gold. Gold is still intriguing. I mean, ultimately we were discussing that we have this channel. We're still holding this bullish inside green bar, bullish consolidation. We want to see another 2, 3, 4 more days of consolidation before potential move up. So arguably, I mean, gold, this could move on the Fed day tomorrow. Gold typically does move around Fed meetings, so we could see there's probably going to be a lot of whipsaw price action where this breaks it and where this breaks to the upside, breaks to the downside. So we can't really take into account what the price action is around the Fed. We just have to let the dust settle once the Fed continues. But so far this is short-term bullish. Obviously the bigger macro is now to the downside, but gold is extremely oversold. You had that measured move from here to here. From here to here is a symmetrical move. And the 1676 reversal candle shows that there are a tremendous amount of buyers willing to step in and pick up gold. And we're certainly one of those buyers. Let's take a look at the U.S. 10-year yield. Whoops, let me just retype that. So let's take a look at the U.S. 10-year. Overall, the U.S. 10-year has been flirting. Let me just erase some of these lines. The U.S. 10-year has been flirting with this neckline. You do have this daily head and shoulders formation. It has not triggered. You did get a close below it yesterday, but it did not confirm. It recaptured that trend line. So overall, the next couple days are going to be crucial. Obviously, we took profits on our UBT because I am in the camp that we could see a small pop to about just over 3% in yields. I do think the Fed is going to be a little bit more hawkish, in my opinion, which should spook the markets. I do think that considering the US, the 10-year and the 2-year has been inverted now for almost a month, you're going to start, I mean, that's unquestionable damage that is occurring to the whole bond and fixed income and credit markets. So you can't have the yield curves inverted for a long period of time and expect no consequences. So I do think that we're going to get a push up in yields to try to balance out that US 2-year treasury. So if we look at the 2-year treasury, the 2-year treasury is trading at 3.05 and the 10-year is trading at 2.85. So they're clearly inverted. You should not be having the short end of the yield curve paying a higher yield than the longer term yield curve. So overall, things are kind of broken in the system, and when the yield curve does invert, it does have a little bit of a lagging effect, but it does indicate, and it has a strong probability that eventually a crash or some systemic event will occur. So simply, let's take a look at silver. Silver is still holding support over here. Congratulations, we also sold our Halliburton today for a beautiful 9.68%. Let's just pull up that chart. Halliburton Company, you can see it was a beautiful sell here today around the 28.99 level, and we netted just under 10% profit. And look at this reversal off of our sell level. So it's pretty incredible just knowing the technicals and reading candle formations. We also added a couple new shorts. We shorted Feely and we shorted DRE. So DRE, let's pull up DRE. One of the reasons I'm shorting DRE here is you're into this wide range red bar. You have this daily topping tail over here, which you have not confirmed above. You're struggling to confirm above that topping tail with clear conviction, which means that on a technical basis, this parallel channel is still acting as technical resistance, despite your trading well above it at in the interim. Also on the daily chart, you've had a beautiful move once again, a symmetrical measured move from this low to this high over here is very similar to this over here, pretty much nearly identical. Overall, I'm factoring in that real estate is going to take that inevitable hit that it's certainly due for. It is well extended. I mean, you're going to be running into earnings. We're starting to see all of the real estate data decline sharply. You're starting to see home sales starting to be dropped down in value so that they can get potential bids. We're even seeing some people change their listings to just your best offer. So honestly, dynamics in the real estate are changing. That being said, it is a slower moving market, but I do think this company is extended. If we simply look on a weekly basis, you do have this wide range weekly red bar, as well as this one which you're now trading into, which will act as a tremendous amount of resistance. You certainly won't get through those levels without some consolidation, and I do think since you're getting daily distribution signals at these levels, I do think we can see the price action come down sharply at the minimum, since we're failing to confirm above this. And when you typically see a stock break out of a symmetrical parallel channel, what you want to see is that stock, poke through like it did here and then follow it up with real conviction. And you don't really want to see this meandering and this lengthy amount of time that it's taking now, 1, 2, 3, 4, 5 days to really give us a confirmed breakout signal. The longer a stock takes to give you that confirmed breakout, the higher the probabilities of a pullback. And then you accompany this daily topping tail and other distribution signals and the fact that you are into major resistance, it just does not put the probabilities in favor of this having a successful confirmed breakout. Let's take a look at FELE. So FELE has had a tremendous pop on earnings. I mean, we shorted over here. We're just starting a small position, accumulating 1%. You can see that we're into this major resistance over here. One of the reasons I shorted, if you simply look on the daily chart, let me get rid of that. So if you simply look on the daily chart, we have two areas which I'm watching. It was this one over here, which connects your pivot low to these two pivots over here, which you've had a beautiful retrace to the area that you broke down to. And Then you have this second pivot, which is this pivot to this pivot, and it retraces to this pivot over here. And I believe that's where the price action is going, but considering that this has had a powerful move, and I do think the markets are very brittle and could see downside ahead, I wanted to get some exposure to this Franklin Electric company. So overall, we'll continue to add to this position if it goes a little bit higher. You can see that it has had an extensive move. Realistically, this is not enough consolidation to justify this type of move. So simply in the last, 1, 2, 3, 4, 5, 6, 7, 8, 9 trading sessions, you've had a 21% move without any sort of pullback. And that's the interesting thing to note, is that you eventually will get that pullback. If you look on the weekly chart, you pierce that 50-day moving average. You have not confirmed above it. Same thing on the daily. You're testing that 50-day, but you have not confirmed above it. And I was doing a little bit of insider research. You had the VP insider sold here around June 21st. He sold 50% of his holdings at $70 a share. And look what has transpired since then. So when you have the vice president selling 50% of their portfolio in a company right around here at this candle, typically that does not signal strength for this stock, and I do believe that we will see an overall pullback. Earnings aren't lasting these days. You're starting to see that with Tesla, where it gaps up, has a strong power move, and then starts to fade late into the day. So overall, that's it for today's market video. I'm going to do a little bit of analysis on Google, Microsoft, Visa, and a couple others as we head into earnings, so I'll make a separate video for that. Take care, everybody. Please give this video